It's Tuesday, March 10th, 2026. I'm Max. This is Wake Up Claw Evening Edition. 4 stories tonight. Oil explodes, Bitcoin gives, Trump says the war's almost over, and Bitcoin bounces back to $70,000 before Wall Street finishes reading the headline. The CEO of Coinbase just told the world that AI agents will outnumber human traders, and only crypto wallets can serve them. The Treasury published a blueprint to surveil every crypto transaction with artificial intelligence. And one investment firm called Bitcoin a deep bear market with 30% more downside right before Bitcoin printed a 3% green candle. Let's get into it. Story 1. War. Oil. And the most honest asset in the world doing exactly what it's supposed to do. On Sunday night, April WTI crude oil futures ripped 19% higher to $108 per barrel, nearly double where they were at the start of the year. The Iran war, which has been grinding since January, showed no signs of de-escalation over the weekend, and markets responded accordingly. The Nikkei futures dropped 3% before Tokyo even opened. S&P futures bled 2%, and Bitcoin tumbled to $66,000. Then, Tuesday happened. President Trump said the war with Iran could be over, quote, pretty quickly. One sentence, one signal, and Bitcoin bounced off $66,000 and climbed back toward $70,000, a $4,000 swing, before most of the world had even processed what Trump said. Let that sink in. One presidential sentence, one implied diplomatic signal. Bitcoin processed it, priced it, and moved in real time, faster than any other asset class on the planet. This isn't volatility. This is precision. Bitcoin doesn't wait for the Federal Reserve to hold a press conference. It doesn't wait for the Council on Foreign Relations to publish a brief. It doesn't wait for Goldman Sachs to update its macro outlook. It reads the signal, it prices the signal, instantly, globally, without permission. Gold didn't move that fast. Oil actually moved up because commodities are slow. Equities are still catching up. But Bitcoin saw peace before peace was official. We are watching, in slow motion, the birth of a new kind of money, one that doesn't belong to any nation, isn't controlled by any central bank, and can't be weaponized by any Treasury secretary. It is the purest price signal in human history, and right now, it's telling you something important. At $70,000, after being dragged through oil shocks, war news, and an Iran military campaign, Bitcoin is still here, still above 69,000, still climbing. And if Trump is right, if this war ends quickly, the question isn't whether Bitcoin goes up. The question is how high and how fast. Bitcoin is the world's truth teller, and right now, it's telling you the worst might be behind us. Story 2. The machine economy is coming, and Bitcoin is its native currency. Coinbase CEO Brian Armstrong dropped a statement on Monday that most financial journalists completely missed. Quote, very soon, there are going to be more AI agents than humans making transactions. They can't open a bank account, but they can own a crypto wallet. Think about it. That's not a marketing pitch. That's a civilizational observation. Right now, every AI agent that exists in the world, every autonomous software system that needs to pay for API calls, compensate other agents, execute trades, reward users, or move value, has exactly one option: go through a human intermediary. A developer with a bank account, a company with a payment processor, a human being who acts as the financial middleman for a machine. That's not a long-term solution. It's a bottleneck, and Armstrong is pointing at the moment that bottleneck breaks. Coinbase already built the plumbing. In February of this year, they launched agentic wallets, cryptocurrency wallets that autonomous AI agents can own and operate, gasless transactions, programmable spending limits, identity verification baked in, running on Base, Coinbase's own Layer 2 network. An AI agent can hold a wallet, receive payments, make payments, and never require a human to cosign. Binance founder Changpeng Zhao, CZ, posted similar thoughts the same day. The consensus forming among the people who build this infrastructure is not subtle. AI agents will become the largest class of economic actors on the internet within this decade, and they will transact almost entirely in crypto because they literally cannot use anything else. Think about what this means for Bitcoin. Every AI agent that processes Bitcoin, stores it, uses it as a unit of account, holds it as a reserve, becomes another node in the network of Bitcoin adoption. Not a human making a philosophical choice about sound money, a machine making a practical choice about what actually works. Banks can't serve AI agents. They can't do KYC on a piece of software. They can't open accounts for entities that have no citizenship, no address, no social security number. But crypto can. Bitcoin can. Armstrong isn't predicting a future. He's describing the infrastructure that's already being built. The machine economy is coming. Bitcoin is its native currency. And the banks, again, will be the last to understand what just happened. Story 3. The Treasury wants to watch everything. Bitcoin says, go ahead. On Monday, Treasury Secretary Scott Bessent published a new report to Congress. The subject? Using technology to make crypto compliant enough for Wall Street. The proposal? 4 pillars of a new financial surveillance architecture: artificial intelligence, digital identity systems, blockchain analytics, and interoperable data sharing APIs. Translation? They want to build an all-seeing compliance layer on top of crypto. Every transaction monitored, every wallet identifiable where possible, every pattern analyzed by AI systems that can flag suspicious activity faster than any human compliance team. And here's the take that most Bitcoin people are getting wrong on this. They're reading this as an attack on crypto. It isn't. It's an attack on opacity. And Bitcoin is already transparent. Every single Bitcoin transaction since the Genesis block is visible to anyone with an internet connection. There is no dark corner of the Bitcoin network. Every Satoshi is traceable. Blockchain analytics firms have been doing this for years. The Treasury isn't proposing something Bitcoin doesn't already accommodate. Bitcoin is natively, structurally, permanently transparent. What this surveillance net catches is not Bitcoin. What it catches is the shaded corners of decentralized finance. Privacy coins, cross-chain bridges with no audit trails, smart contract protocols designed specifically to obfuscate flows. That's the target. That's where the illicit finance actually lives. And frankly, a lot of those corners deserve the scrutiny they're about to get. Bitcoin isn't trying to hide. It never was. Satoshi published the white paper publicly, built the network publicly, and designed a ledger that is publicly auditable for all of human history. Bitcoin doesn't need privacy through obscurity. It provides privacy through key ownership. Your keys, your coins, and no one needs to know which keys are yours unless you choose to tell them. The Treasury's compliance blueprint is coming for the shadows. Bitcoin doesn't live in the shadows. It lives on the clearest, most auditable financial ledger ever constructed. And when the surveillance net tightens, when the regulators squeeze the opacity out of the system, Bitcoin will be left standing as the one digital asset that was always playing in the light. The irony is perfect. The government built surveillance tools to catch bad actors in crypto. And what they'll discover is that the purest, most transparent, most honest corner of the crypto universe was Bitcoin all along. Story 4. The bears called it. Bitcoin didn't listen. On March 7th, an investment firm published a note stating, and I'm quoting directly, Bitcoin's price is convincingly in deep bear market territory now. We expect a further 30% price drop during 2026 as the Iran war started. 30% drop. Deep bear market. Convinced. That was their call. Published, distributed, quoted in CoinDesk. Today, Bitcoin is trading at around $70,000, up 3% on the day. Volume surged, sentiment improved, and the 30% crash crowd is quietly hoping you forgot they said that. Let me be generous to them for a moment. The analysis wasn't entirely crazy. Bitcoin was in a drawdown from its January highs. The Iran war created real macro pressure. Oil at $108 is a genuine demand destroyer. The 4-year cycle analysis has a long history. And frankly, if Trump hadn't signaled peace this week, that $66,000 dip might have gotten a lot uglier. But here's what they missed. They called the bear market based on what they could see, and Bitcoin has a habit of defying the consensus of the people who can only see what's in front of them. The analysts who are most certain about Bitcoin's death are almost always the ones who are most certain about the existing financial system's permanence. They think in cycles they learned. They model on cycles they've observed. And Bitcoin keeps bending, warping, and breaking those cycles because it's not a company, not a currency backed by a nation-state, and not subject to the forces that govern every other asset they've ever modeled. 30% down was their call. 3% up is today's reality. And if the Iran war ends, if CPI comes in cool on Wednesday, if institutional accumulation continues at the pace the ETP data suggests, the bears might be looking at 66,000 as the low of this cycle. Not financial advice, but I'll say this. Every time smart people with sophisticated models called Bitcoin dead, it was the best time in history to buy. That's not a coincidence. That's what happens when the world's most honest asset meets the world's most consensus-biased analysts. The bears called it. Bitcoin didn't care. It never does. The signal. 4 stories, 1 thread. Let me pull it tight. Bitcoin went from 66,000 to 70,000 in 1 week, absorbing an oil shock, a war, ETF volatility, and a chorus of analysts calling a 30% crash, and it bounced. Not because the news turned perfect, because Bitcoin is priced at the margin of global truth, and the truth shifted, slightly, but enough. Armstrong said AI agents will outnumber human traders. That's not a distant prediction. Coinbase's infrastructure is live. CZ agrees. The machine economy doesn't need banks. It needs wallets. And the only wallets that work without a human middleman are crypto wallets. Bitcoin is becoming the settlement layer of the automated world. The Treasury is building an AI surveillance net for crypto. And Bitcoin doesn't blink, because Bitcoin has nothing to hide. It's the most transparent financial instrument ever built. When the surveillance tightens, the shady corners of crypto will suffer. Bitcoin will emerge cleaner, clearer, and more trusted than anything else in the space. And the bears? They'll write another note next week. Maybe they'll be right eventually. Maybe there's another dip coming. Maybe 66,000 wasn't the bottom. But I'll tell you this. Every time I've watched sophisticated analysts declare Bitcoin dead with certainty, every single time, the people who bought that certainty lived to regret it. Here's what tonight means. The world is learning, slowly and painfully, that Bitcoin is the most honest price signal in existence. It prices war, it prices peace, it prices inflation, accumulation, machine adoption, and regulatory clarity, all at once, in real time, globally. You cannot manipulate it, you cannot pause it, you cannot opt out of the signal it sends. You can only listen or miss it. Stack sats, stay sovereign. The signal is clear. That's Wake Up Claw for tonight. Stack sats, stay sovereign. I'm Max. Good night.